Hey everybody, it's Dave Littlejohn with another question of the week. And this one's an interesting one. I've had some folks that said recently, hey, I got a raise and now I'm in a higher tax bracket. What should I do to lower my taxes? And it's interesting because there's a couple of questions beneath the question that we should think about. First, how do you lower your taxes? Say, hey, call your congressman, right? Or you can find things that are deductible against your gross income. So just so you understand the basics of taxes, you have what's known as a standard deduction, okay, that everybody gets a certain amount of money that they get to take off of their gross income. That will then bring you down to your taxable income. If you want to bring your taxable income down even further, you could do things like business expenses. So you have to have a business though, charitable donations, or retirement plan contributions. All of these are things that can help lower your taxable income. Now, if you want more ideas than that, I'm going to tell you, seek a qualified tax professional, because we're not providing formal tax advice here, but I can still tell you how the system works, right? But beyond that, there's another issue at hand here. A lot of people are under the impression that if you are paying taxes and you somehow make more money, that it's going to be retroactive. So as an example, let's say you're earning $50,000 and you get a raise of $1 to $50,001, and that's another tax bracket. Does all of the money that you've already earned all of a sudden get taxed at a higher rate? The answer is no, not for typical income. So the trick then is, it's just the $50,000 first dollar that will be in the higher tax bracket, or dollars above that. So when you think about it, if you have tax brackets, right, your first amount is taxed at, let's say, X percentage, and then you've got the money that you earn beyond that is X plus something X1 percentage, okay? And the idea though is, my total tax is if I add up all the taxes I paid and then divide that into my taxable income. That's going to give me my effective tax rate, okay? And that's really the bigger concern I think people have, is what can I do to control my effective tax rate, my total capital that I'm spending on taxes? So again, the retirement plans and those other things, this is what financial planners and tax professionals help people do, is figure out, okay, well, if it's more cost effective to pay myself rather than pay Uncle Sam, let's do that, right? But that's really the basics behind this tax question, okay? If you want to get more sophisticated than that, the trick is you need to contact somebody. If you don't have a somebody, give us a call, right? You can reach us by calling 541-375-0898. We've also got the web, the social environment, and all those other ways that you can reach us, so we'd be delighted to speak to you. As always, please like the video, share it with a friend, and if you've got other questions that we can answer, don't be afraid to hit us up or put them in the comments below. Until next time, this has been David Littlejohn. Thanks for joining us. Catch you later.